Today on Your Money, I'm talking insurance, why prices are going up to protect your home and car, what you can do to save some money, plus insurance companies flying drones to scope out our houses, and which states have the highest and lowest insurance costs. It's all coming up next. Welcome to Your Money. I'm Gordon Severson. I'm here to help you save some money, invest some money, and spend your money wisely. And today, we're talking about insurance, one of the rare products out there that you pay for and hope you never have to use. So it's double frustrating when a product that you never use gets more expensive, right? Right now, millions of Americans are seeing higher insurance bills on their car and homeowners insurance. And I wanted to know why. Beginning with car insurance, Allison Gormley explains why the average driver is now paying 22% more than they did last year.
Pricey car insurance is prompting our antennas to go up.
Have you been hearing from customers about their rates?
We have been on a daily basis.
Insurance advisor Natasha Mecklenburg said you are paying more money for a few reasons.
Claims, believe it or not, weather-related claims. We have a ton of hailstorms. We think of hurricanes in Florida. Majority of those claims are all car insurance.
Auto thefts are also surging, with more than 1 million cars stolen nationwide last year. Then there's the cost of fixing cars.
All the electronic gadgets that we're seeing in e-cars, they're a lot pricier to repair.
Gas cars too. For example, replacing a standard side mirror can run you between $300 and $500. Add driver assistance features, and that replacement is now between $1,000 and $2,500. So if you're looking for ways to save money on insurance, pull out your policy and talk to a broker who can shop it around with multiple carriers. Next, make sure your life information is up to date. Did you change zip codes? Did a kid move out? Are you working remotely? All of that can impact your price. Then look at your coverages. Ask your broker what's at risk if you lower or leave out any optional protections. Finally, talk discounts. Those can include personal traits like being a good driver, your affiliations, including employer, alumni, or military, and policy preferences like being paperless.
Later in the show, I'll talk about how you should always shop around for car insurance, especially when you go through a major life change, like a marriage, divorce, or a new teenage driver. That's coming up in just a few minutes. Drones are the hot thing right now. People fly them for fun, to shoot video, and for business. Many realtors are using them to get aerial pictures of the homes they're trying to sell. And now even insurance companies are jumping on the drone bandwagon. Shannon Handy shows us why.
This is nothing new as far as looking at homes and looking at properties at renewal.
Insurance expert Carl Sussman says while taking pictures of a home before renewing a policy is normal, he acknowledges the strategy more companies are now using to do it can feel a bit evasive.
It's just the idea feels a little bit awkward and a little weird and a little strange to have, not know when it's happening.
Recently, a CBS 8 colleague of mine received a notice letting them know satellite imagery showed moss on their roof, which could result in a canceled policy if it wasn't taken care of. A spokesperson with nonprofit consumer advocacy organization United Policyholders told me there's been a dramatic increase in reports from customers with similar stories. Homeowners claim drones and other devices captured things like debris and in one case a drained pool, all of which led to their policies getting dropped.
What we're seeing is companies that are at renewal going and looking at the risks that they have to determine if there's what's called deferred maintenance, for example.
I asked Sussman if we're seeing this happen more now because companies are looking for reasons to drop customers. He says, while that's possible, more than anything, they're gearing up for home insurance regulations to change by the end of the year, which will allow them to offer underwriting discounts.
The only difference is right now, it's an all or nothing, right? It's either you must have it fixed or you can't have the policy, whereas with the new regulations, you'll have the option. Do you want to pay more by not fixing your roof, or do you want to get a discount for having a new roof?
Sussman says the overall goal of this practice is to not have a claim, but given the fact insurance companies in California are letting go of more and more customers, he advises if your insurance company points out something, don't hesitate to get it fixed.
It's your best bet to just get it fixed right away.
Absolutely, right. Because again, the carrier doesn't have the option to underwrite based on it. It's all or nothing until these new regulations come out.
Working for you, I'm Shannon Handy for CBS 8.
So if you hear a drone buzzing over your house, don't be surprised if it's your insurance company checking things out. Speaking of insurance and the top of your house, replacing a roof is one of the most expensive repairs on your home. Jason Wheeler shares a personal story of how his insurance company had some wrong information about his roof, and it was costing him money. Check it out.
So, yeah, I've been financial fighting again, and it is as bad as it looks, too. But you should see the other guy. Okay, so let's go back in time. Without realizing it, I've been taking a slow, long-term beating. Last year, I, like so many of you, had to have my roof replaced after it was beaten up by hail. Now, I had previously set my hail deductible at $4,500. Kudos to me for paying that last year, and kudos to me for having total replacement cost coverage, not actual cash value, because that meant that the rest of the expense for that very expensive roof replacement had to be paid by my homeowner's insurance, and kudos to them for doing that. That, however, is where the kudos end, because also like many of you, my homeowner's insurance has been going up and up. Recently, I started wondering, shouldn't some of that increase have been mitigated by my brand new roof because it has less of a risk of failing? So I chatted with my insurer by text, which I love because now we've got the conversation in writing. I asked them, when do your records show my roof was replaced? Okay, so the correct answer is 2023. The partial credit answer would have been 2009-ish when it was also replaced. The absolutely incorrect and impossible response would be 1992. They answered 1992. I don't know where they got that. They don't know where they got that. Anyway, I demanded a recalculation of my premium and what my insurer might owe me now retroactively for their long-term mistakes, and they responded, we'll update the roof age, but there's no discount for new or younger roofs. When they told me that, I punched my own eyes. I mean, come on, guys. The age of the roof, which is one of the most expensive components of a house that affects a lot of other components, is a huge factor in determining risk and therefore premiums. A simple Google search tells me that. Insurers have told me that. The Texas Department of Insurance tells me that in this explanation of how insurance costs are calculated. It's right there. And I even immediately found an article published by my insurer that said a new roof could lower your premium and that roof age is one of the biggest risk factors for a home. I escalated to a supervisor there and they confirmed, yeah, it matters and my rate will be adjusted. And again, I'm pushing for retroactive adjustment since they were wrong with the previous replacement date and then wrong again when they paid a lot last year for a new roof and yet still thought that my roof was 32 years old. Now, if yours has been replaced in recent years, and a lot of them have, you might want to check the insurance company's records, and if their answers are nonsensical, go up the food chain.
What a great reminder to check your policy and to check with the insurance company to make sure they have the right information about your home. Coming up after the break, I sit down with an insurance expert who explains why prices are going up for car and homeowners insurance and what we can all do to save some money. Stay tuned. Well, we all know it. Insurance costs are going up for your car, for your vehicle, pretty much everything. So we're here to give you a little bit of advice to help you try to figure out those costs and save some money. So I've asked one of our experts to come on the show and help us out. This is Aaron Cocking with the Insurance Federation of Minnesota. Thank you so much for coming on the show.
Absolutely. Thanks for the chance to talk about the issues.
I'm sure you get these questions all the time about insurance. I mean, it's your job, right?
Yeah, I can't seem to go anywhere without people wanting to stop, whether it's socially or professionally, and say, why are my insurance premiums going up?
There's so many types of insurance. I think to make this a little bit more simple, let's narrow it down to car insurance and homeowners insurance. What are some of the main factors that are driving up those costs?
Yeah, let's start with auto insurance because we all drive, and in Minnesota and in most states, we have mandatory coverage for liability. And so if you're going to drive on the road, you have to have insurance. One of the things that we're seeing nationally is obviously inflation. And inflation is hitting areas outside of insurance. But people don't see it kind of as directly or as soon as we see it in other parts, or at least where it hits its peaks, like we do in insurance, because insurance is a lagging indicator in the economy. So when you have increased costs for parts and labor and all the rest of that stuff that we were all seeing, a year and a half ago, 2 years ago. It takes a little bit to get into the system. And as companies see that and they put that in their rates, that's why we're now seeing more significant increases than kind of when inflation was at its peak.
And I know in previous conversations you were telling me that there's, in the courtroom, in the law side, there is a cost there as well.
Yeah, the cost of litigation and what we talk about with nuclear verdicts, which is just the explosion of these huge returns that victims are getting, in this notion of social inflation, which is, juries seem to not quite have the same level of respect for what a dollar is, and so they think and they look at these companies and think, well, you've got all this money, and so we're just going to give it to this victim, and they don't realize that the money, especially for insurers, comes from policyholders, and the more that insurers have to pay out in losses, that's reflected for all of us in the form of higher premiums.
And with homeowners insurance, you and I have talked about this. We have this issue here in the Midwest, but it's also nationwide, is when there's damage to, your roof or damage to your home, a lot of people are like, just replace it, and insurance companies, or roofing companies will be more than glad to come in and do that. And there's a little bit of an issue there that there are a lot of these roofs and siding that's completely replaced when it could have been repaired. And that's a factor as well.
Yeah, I mean, the roofs and siding, especially as a result in the Midwest of severe convective storms, in coastal states as a result of hurricanes, all of those increased storm activity is leading to these increased loss costs. And as we pay out more in these loss costs, that's all reflected in the form of higher premium. And so when you get the hail that comes and hits these roofs, and you get these contractors that are out, knocking on every door saying, hey, I think you might have hail damage, and people look and there's like, well, I'm not a roofer, so I don't know, maybe I do have hail damage. And they're like, just sign here and we'll replace your roof, and your insurance company is going to be responsible for it. That we all pay for that in the form, and talk about, we're throwing away roofs that have, collectively millions of years of life left in them, into our landfills, and that's, again, we're all paying for those additional costs.
And I mean, you can't blame someone for, I pay for this insurance, I'm going to replace my roof if they're going to let me, and it's going to, the dollars are going to make sense. But when you zoom out like that and look at like the whole country, there, like you said, everyone's kind of paying for more and more of those roofs being replaced.
Yeah, and I think it's important for people to realize that when you buy insurance, it's not a savings account. So this notion that it's like, well, I've paid in, it's time for me to actually collect. That's not how insurance actually works. We would never discourage people that have legitimate claims from filing. I mean, that is what insurance is there for. But we all have to be cognizant and recognize that, for these claims that we turn in, where you might have a couple of dings on your roof and you're looking at it and you're like, there's plenty of years left in that. By replacing those and tearing those off, when everybody does that, we all pay for it.
For sure. And so that leads us to our next part of this conversation. We've kind of identified this problem of the prices going up for various reasons. What can we do as consumers to try to save some money and get those costs down a little bit?
Yeah, I mean, I would say, number one, it's always a good idea to shop around. I think a lot of times people think, well, what one company charges, what's another company is going to charge, and that's not true. Really shopping around, because different companies have different appetites for different types of risks, for what they want to take on, and it really is to the advantage of the consumer to say, I get my renewal, this is higher than I want to pay. What can another company do for me? The other thing people should do is to look at bundling their home and auto together. There's oftentimes a significant amount of savings that you can see as a result of that. On the auto side specifically, maintaining a good driving record is something that we encourage people to do. If you pay your entire premium yearly up front, a lot of times companies will give you a discount for that. And on the homeowner side, building and putting on, materials and shingles that are more resistant to storms will oftentimes be able to save you money, because insurance is all predicated on what your exposure or what your risk is. And so when you put on material that is more resistant, that is a reduced risk that the insurer knows that they're taking on.
And I've heard there's, more programs, more states that are kind of moving more towards that, where they will give you, a little bit of a cost saving if you start to have that in mind when you build your home, when you replace your roof. And so that's something that people should really be looking at in their individual states.
Yeah, the IBHS, which is the Insurance Institute for Business and Home Safety, located in South Carolina, does a lot of this testing where they'll bring in and they've got these huge facilities where they can simulate hail and they can simulate wind, and they can say, how do we build to a standard where when these storms come through, the materials in these homes are going to be able to resist them more. As a result, they put out recommendations, and one of those recommendations that they've put out is this notion of a fortified standard. And a number of states are moving towards adopting those. I know states like Alabama, Oklahoma, some of the other coastal states have moved towards the adoption of that. And a lot of times, when you build to that fortified standard, there are insurance savings to go along with that.
And I know in previous conversations you and I've talked about, that shopping around idea. It's really a good idea when you have big life events. And I think you and I had a conversation about, having a new teenage driver. That's a great opportunity to start looking at other companies because each company values that risk differently.
Yeah, 100%. When my oldest daughter turned 16 and she got her driver's license, and I reached out to my agent and I said, I need to add her car and I need to add her as a driver. And he called me back and he said, you're probably going to want to find a different insurance company because your insurance premium is going to triple. And I thought, what? I knew it was going to be bad. I didn't realize it was going to be that bad. But when I shopped around, I found another insurance company that was willing to write her, and my premiums ticked up only marginally from what they had been with that other carrier, which is why I want to, reiterate to people that there really is value in shopping around.
And it's if you get married and you're on the same, if you become an empty nester and your kids come off of it, these are all great life events that you should really shop around because your situation changes so differently that you might find a better company gives you a better rate.
That's exactly right. And you think about other life events. I mean, I think most notably, like if you get to the point where you retire, you're not driving as many miles. And that's one of the things that insurers factor in when they're setting rates. A lot of people, when they fill out their applications, probably remember their insurer asking them how many miles they drive annually. If you're not driving back and forth to work every day, chances are that your mileage is going down, and you should really update your insurer to let them know because you might be eligible for a better rate then as well.
And you and I worked on a story recently, here at my station about how weather is really affecting some of these insurance policies. And one thing, and this is kind of, motivated by my own situation because my insurance agent reached out to me and said, hey, here's your new policy for the year. I got a little bit of an increase for you. I think it was like $270. And I was like, that's great because most people are spending an extra $1,000.
Right.
But the catch was that the change on my deductible specifically for hail and wind. And so I think a lot of people are going to be seeing that in the next year or so with their new policies. Would you recommend really reading that fine print because some of their coverage might be changing as these companies adjust to these weather events?
Yeah, 100% right. And I think that's one of the things about talking to an agent and working with an agent that you trust because they're going to be able to tell you that. So you're saving premium on the front end as a result of potentially, in the event that you have a loss, paying more via your deductible. And that's one thing that people should evaluate. Do you want to save money on the front end or would you rather save money on the back end? And there's not a right answer necessarily to that. Everybody has to take and determine for themselves in their own situation if it's better for them. Do they want to pay up front, more knowing that they're not going to have to cover it later? Or do they think, I don't know whether I'm going to have a loss. Maybe it's better for me to take that money and put it in my own savings account. And then in the event that I don't actually have a loss, then I'm not out that. But working with an agent that you trust is really important because they'll be able to walk you through that and say, have you thought about this situation? Have you thought about this situation? And really get you to the point that you've got coverage that works best for you.
And I know it's like this huge packet when you get it. I mean, it looks like, like a college textbook or something. But I started kind of reading through it a little bit, and I found out that I was covered for things I didn't even know I was covered for. Like, there's if I've ever hacked or cybersecurity stuff,
That's right.
I learned that I have some protection there with my homeowners and policy. So you might find that there's some things you're covered for that you didn't know about.
We always joke, that people when they get their insurance, they only look at it twice. When it comes and they pull out the deck sheet and everything else goes away. And then when it comes claims time and they're like, where's my policy at? What do I have? What do I have covered? But yeah, reading through your policy, you'll find out that there are a lot of things that insurers provide coverage for that people might not necessarily understand.
And I guess the last topic we should bring up is, it's great to save money and it's great to be thinking about this, but at the end of the day, it kind of rings true. You get what you pay for when it comes to insurance. If you're paying for one of those policies that's super, super cheap, you might not be getting that interface with an agent. You might not be getting that as much coverage as you think. So that's probably something people should really keep in mind.
That's exactly right. And that's, again, working with an agent who knows your situation is going to be able to put you into the best policy and the best company that fits your specific needs. Some people maybe only need a bare bones policy because, their situation is such that works best for them. But again, working with an agent that's going to be able to say, I don't think that's probably best for you, even though it's cheaper. And that's one of the things we see. Most states have minimum liability requirements for their auto policies, but buying minimum limits is not always in everyone's best interest. There's a lot of times when you get to the point where whether you're making more money or you're having more assets, that those become, you put those at risk if you don't have adequate insurance to cover if you cause injury or harm to someone else.
Well, thank you so much for coming down and talking insurance with us.
Absolutely, Gordon. Thanks for the chance to talk to you.
Still to come, which states have the most expensive and most affordable insurance? The answer may surprise you, so stay with me here on Your Money. Welcome back. I'm starting to sound like a broken record here, but I can't say it enough times. It is so important to understand what your insurance covers and to shop around. I know it's easy to just stay with the same company forever and never change, but I hope this next story will give you another reason to test the waters with other insurance companies. Kevin Kennedy has the story.
When you're 71 years young, the joints don't work like they used to.
I know that one of my hands, my right hand, I couldn't hardly bend it.
Back in 2011, Bernice DeBray had a stroke, then another. Since then, walking involves a cane, and her doctor put a stop on getting behind the wheel.
My legs and hands, I don't have full control of everything.
Bernice able to manage and get around, but late last year, she was given some bad news.
My insurance company told me that I don't have any allowance for transportation.
The new policy no longer covers rides to the doctor, and she goes a lot.
It is a very big problem for me because, like I said, I don't drive.
On a fixed income, taking an Uber or a taxi isn't really an option. So Bernice calls us.
So I was hoping that y'all could find a loophole. Maybe it was a misprint.
Unfortunately, there's no loophole. The insurance company cost-cutting. Transportation no longer offered.
I couldn't sleep at night. I said, how am I going to get to my doctor's?
But we didn't give up, and either did Bernice. Plan B? Change providers. Find one that covers transportation.
When I hung up from talking to you, I started that day.
About a week later, we found one.
It all worked out. I have my transportation and everything.
While many people don't like going to the doctor, it's a bit better knowing it won't cost you $30 to get there. In Greensboro, Kevin Kennedy, 2 Wants to Know.
So again, shop around. Every insurance company is different. You might find a better deal somewhere else or better coverage that fits your needs. Insurance is all about protecting your biggest investments from this crazy, unpredictable world we live in, like potholes on the road. Ashley Graham shares the story of how 40 drivers all hit the same pothole, and many are still waiting to get paid.
A long line of cars on the side of I-205 in January.
There we go, all the people got blown tires.
Evidence of a pothole that damaged tire after tire.
She was like, oh my God, what happened? What was that?
Gina Lee Page was in the car with her daughter.
And I was like, it's okay. It was the tires. We're going to pull over. We're going to check it.
Driving past the Abernathy Bridge when she hit the pothole.
So that was the damage to one of my tires.
Here's a look at the hole. ODOT estimates that over 40 cars were damaged by it.
There was obviously several police officers. One of them walking through did tell us that we can file a claim with ODOT. And so that's what we did.
Page went online and filed a claim against the state through the Department of Administrative Services.
In my mind, because the police officer had told us that we could file a claim, I thought, okay, kind of stinks. I'm going to have to come out of pocket on this, but at least I'll get reimbursed.
Page had already paid out about $1,500 when she received a letter from the state saying they transferred her claim to a contractor, Quit Infrastructure West.
I felt like we were just getting the runaround.
She then followed up with the construction company.
Upon thorough investigation, we have determined that neither Quit nor ODOT was in breach of any duty owed to motorists.
Quit said they weren't liable for what happened to Page's car and they wouldn't be paying her.
The pothole was promptly repaired as soon as possible after notice was provided, and there was no negligence or delay in addressing the issue.
KGW found that Paige's experience isn't unique. Records show that of all the claims filed in 2022 and 2023, the state paid out less than 4%. The vast majority of claims related to potholes were denied.
Somebody has to be held responsible. That was a lot of damage done on something that could have been prevented if the job had been done right to begin with.
And as of mid-February of this year, we found over 90 claims have already been denied. 16 others are still waiting for a final decision. As for Paige, she says she just wants to be reimbursed for what she lost.
I'm a single mom. Yeah, it's a huge hit. I have a feeling it was a huge hit for a lot of us.
For the final segment of the day, have you ever wondered which state pays the most for insurance? Bankrate looked at the average cost to insure a home valued at $300,000. And Florida came in at number 1 with just over $6,300 a year. Louisiana came in at number 2 at $6,100. Nebraska number 3 at $5,900. And just in case you're wondering, the state with the cheapest rate is Vermont, with $806, followed by Delaware, New Hampshire, and West Virginia, who are all under $960 a year. Well, under $1,000, that must be nice. You know, I'm somewhere in the middle, so I guess I can't complain. Well, that's all we have for this episode of Your Money. Until next time, I'm Gordon Severson, helping you save, spend, and invest your money wisely. I'll see you next time.